Hey, good morning, everybody. You guys should see it at my house. It's like mission control here. I am clicking and hitting and doing all these different things so I can come in and say Happy Friday. How's everyone doing today? Man, last day of the week, guys. You made it. Good job. Good morning, Bobby, Chadwick, Alex, Jose, Mike. Good to see you. Those of you that have made it back for a second round, K-Pops, I see you're back for more. Nice to see you. It's 9 a.m. Here we go. Man, I slept last night. You guys are in trouble. I am wound. We're going to have a good time today. We're going to do the exact same thing that we did yesterday. Every morning I'm like, what do I name the class? What do I name the class? I change it every day because every day I'm in a different mood, right? So today we're going to do recognition through repetition. And that's really what this is, guys. Remembering that you're brand new. Remembering that this is a new concept, new ideas, new looks, and being cool with that, right? It's like the first time you do anything, you're probably not going to be great at it. But if you're committed and you commit that time and you commit the practice, you can really become good at anything. Um, it just takes a while. Everybody's on a different path. It takes everybody a different amount of time. I am going to respectfully request that you guys allow it to be simple, that you guys allow it to be easy, that you keep it minimalist, because it doesn't have to be difficult in the beginning. Guys, you have the rest of your life to make things difficult. Let it be simple for a while. Um, First thing I do each and every morning, I think I say this every day. It's like that movie Groundhog Day with Bill Murray. ForexFactory.com. Here we go. Let's check the news. Let's see what's going on. There was a little bit of silliness at 7:45. The FOMC member Waller spoke. It was a medium impact. But guys, at 10 a.m., we have the preliminary U of M consumer sentiments. If one of you called me on the phone right now and said, Mark, I really need you to describe what is preliminary U of M consumer sentiment, I would tell you I have no idea. But what I do know is that it's high impact, that the one right behind it is medium impact. So at 10 a.m., that market may bump, jump, spike, run, become untradeable, become unpredictable, right? The patterns might change because of emotional response. So at 10 a.m., I'm probably going to take a break. I'm going to go refill my water or not. It may not. It may not. She might say yes, she might say no. You don't know. But the potential's there, right? So at 10 a.m., I'm putting a note on a piece of paper. Maybe I'm setting a timer with Siri that says, hey, the market could potentially go a little sideways at this time. It may not be advantageous to trade it. Go sit on your hands. Go take a break. Go high five your wife, scratch the dog behind the ear, play on the Google Webs for a minute, whatever you need to do. But guys, every morning I'm checking news because it's important to me to always have advantages. And I believe trading into a high impact news release could be disadvantageous. That's today's big word, disadvantageous. Um, Brand new users. I see I got a couple of you in here, guys. It's a light crowd this morning. That's okay. Let's play the where to find stuff game. Starting from the education page, guys, this is your software user guide. As we head into the weekend, I think it's important that you guys scroll through this, especially if you're new to NinjaTrader. This is where you're going to get everything you need regarding NinjaTrader, building new charts, screen capture programs. We're about to talk about that. Opening, closing, market replay, how to use it. Guys, you can go back and you can replay the day each and every day. Connecting to your live Ninja account, moving and scaling charts. We're going to talk about that one too. That's a big one for new users, being able to make sure that you can see everything that you're doing. Adding symbols, rolling contracts. NinjaTrader 8 does that automatically for you. If you are a NinjaTrader 7 user, guys, you needed to roll crude yesterday. Crude rolled. If you look at my contracts, I am now on the August contract, no longer on the July contract. Good morning, Philly. Good morning, Luciano. Applying chart templates, market flow. Guys, anything and everything that you need is right here on that user guide. I put the link in there. And then where we spend most of our time is right here in the tutorial section. everything that you need to be successful as a brand new user. Hey, David AZ, good to see you back in here. Everything that you need as a Nexgen user is available to you right here. Guys, this is your go-to. The rules are here. The ideas behind the rules are here. Everything that you need, and I can't stress that enough. But before we get into rules, before we start talking about stuff, let's go through some basic NinjaTrader basics. I'm going to knock this NASDAQ chart out of whack, right? If you wake up one morning and you're like, oh my goodness gracious, all of my price bars went away. I don't seem to have more than one fib. I don't have any of those trigger lines. There's no mid-band. What on earth am I going to do? Hey, tech department, my software's broken. Well, chances are the market's just trading where you're not, and that's totally cool. This happens a lot, guys. When I first started with the software, I would scroll like this and go, where the heck is all my stuff? I can't find it. And I would literally take 2 or 3 minutes every morning scrolling through trying to get back to where the market was. When all you have to do is there's 2 little buttons right up here in the upper right hand corner. This holds true for NinjaTrader 8 as well as NinjaTrader 7. The F button is going to bring your bars back. It's going to make it so that you can see them. If they ever start to go off chart, all you have to do is click this F button and it puts it right back, and you're not going to miss them. You're not going to lose them. But in order to be on the most current bar, or to know you're on the most current bar, it's going to be highlighted in black. The most current price is always highlighted in black. So if you're looking, this market appears to be moving down. This market looks like it's stuck going up. You're going to see this white arrow, and this white arrow is going to bring you back to the most current bar. And now your 2 charts line up. So those are the first things that you're going to do as far as scaling. A lot of you, if you're anything like I was, you may get into a trade and you might take that left axis and left click, or that vertical axis, and do this. Like, oh, I need to squeeze it. Oh, I need to make it wider. That's cool if you do it, but you overdo it. Click that F, it brings you right back. Horizontal axis, if I left click on it, I can tighten things up. That's kind of silly, right? I can't trade that. So I'm going to scroll it back the other direction. And then some of you might do it like this. You're like, well, if there's less things in my way, then it's got to be easier to trade, right? Maybe a little excessive. So make it so you can read it. Make it so you can see where you've been, where you're potentially going. And again, if this pulls back all the way to here, that white arrow is going to bring you right back. If you hide it, the white arrow. If you squish it, the capital F. Guys, these are some of the things that you're going to use every day. I encourage new users, mess up your charts. Jump in, break things, right? So you know how to fix them in the moment. There's nothing worse than being in a trade and going, oh my gosh, my charts don't line up. How am I supposed to manage this trade? Well, quick click, boom, back, good. If you have any questions about scaling charts, guys, if you have any questions about moving those axes, stuff like that, bounce into the user guide. It's going to help you out. Or raise your hand and ask in class. There are no questions that are off limits. Next, we're going to talk about really our path for the day. Your path for the first 30 days, guys. Guys, can you hear me? Give me a Y if you can hear me. If you can't hear me, then you can't hear that at all. Let me double check all my connections. You guys are good with me? Okay. So yeah. That's on Mike M, right? I told you guys we were going to shut him out of the room. He didn't believe me, but there he goes. Not really, guys. Sometimes that is going to happen. Sometimes you're going to come in and maybe the sound isn't there. Just say it in the room real quick, and I'll always ask, hey, can you hear me? And if I never get a Y, then I'm like, oh, no, it's me. But usually it's on your end. I rarely lose sound on this end. Discord will kick me out of the room, but you can still hear me even when they kick me out of the room. So we'll give Mike M a chance to come back. Guys, when we're talking about the software, when we're talking about your path, it's really pretty simple. For your first 30 days, I want you guys to focus on one thing. And I always ask people to do this. And really, to be honest with you, if you're not winning 60% of your trades or better, I want you to focus on one thing. I want you to allow it to be easy, guys. I want you to focus on a high probability trend trade. We're going to devote the first hour of this classroom to discussing the rules, the looks, what the advantages are that come from it. But a high probability trend trade is defined when each indicator on every chart agrees with the rules for the trade, guys. This is your best chance of success. Typically, this is when the triggers are their strongest, when there's no termination conditions. There's no trouble spots between your entry and your target, guys. Every chart that you own is going to agree for this trade. This is a trade that typically wins 70 to 80% of the time. This is, in my opinion, your path to success. It allows you to keep it simple. It allows you to keep it focused. Most of you are adrenaline junkies, and you'd rather be busy than consistently winning. And I get that. I fall into that category too. Your high probability trend trade is going to take you into a medium probability trade, guys. And this really is going to be the vast majority of your trades, but it requires a little more advanced skill set. To take these medium probability trades, you're going to have to be a chart reader. Your high probability trend trade is going to turn you into a chart reader. Through study on the high probability trend trade, you're going to understand three very key elements. You're going to be able to look at your software. You're going to understand where the market is likely to continue, and you're going to be able to use those continuation points for entries. You're going to understand where the market is likely to go using the momentum and Fibonacci. You'll be able to make good decisions on profit targets, and you'll finally understand where the market is likely to stop. And these are what we call termination conditions. These termination conditions can end a trend. These termination conditions can create a bounce that'll pull you out of what is a seemingly good trade. And these termination conditions are going to act as an anchor for the most consistent trade that we teach, that high probability trend trade. A high probability trend trade that comes from a termination condition, from an area where the market is reversed at Fibonacci, is the strongest trend trade that you can take. It's a trade that typically wins 70 to 80% of the time. We're going to talk about the rules for this trade. We're going to talk about the looks and your ability to recognize this trade is going to allow you to take that medium probability trade. And a medium probability trade is when most of the indicators line up for a trade. However, a small issue exists, one singular. Your ability to read your charts will identify that small issue. You're going to have to take these trades and manage them assertively. Your ability to read your charts is going to give you the skill set that you need to manage more assertively, to be able to identify trouble spots, to be able to take profits quickly, to know when it's time to get to a zero loss level. Guys, this medium probability trade is like the siren song. It's going to call to you. But without the skill set that you build with that high probability trend trade, these trades are going to become difficult for you. So I want to start easy. And once you go through easy, once you go through simple, then medium probability falls in line with that. Simplicity follows that strong foundation. So we're going to talk about the high probability trend trade. We're going to talk about the path to success, guys, the path that's going to get you where you want to be. This is time tested. This is really the easiest way to get to that point where you're comfortable with the software, where you can read the software, where you understand the advantages. It's up to you whether or not you embrace it. I would encourage you to embrace it. I've seen 1,000 people fight it, and all of us that fought it, and myself included, had to come back and refocus on simplicity to get to where we wanted to be. Guys, it starts with posting your trades in class. Every time you take a trade, post a picture. Every time you have a question about something you see on your charts, post it in picture form. Not only are you giving me something to look at to give you the best possible answers, but you're also giving yourself something that you can go back and study. You can type those answers on the chart, and you're creating training tools for yourself. So if you post your pictures every time you take a trade, and if you spend the time to annotate your charts, to tell me why you did what you did. Hey, Mark, I went long here. Well, why did you go long, K-Pops? Well, I went long because I had odds favorable momentum and there was nothing in my way. And I took my entry on a smaller chart because that's what the rules say. And we're going to virtual high five and you are going to get the best feedback possible with the most information that you give me. Let me throw that in there, a little how-to on annotating charts. And then you're going to be able to take every picture and put it in a real-time performance spreadsheet. Guys, it's already there. If you downloaded the software, your spreadsheet is in the Nexgen Study Picks folder. All you have to do, misspelling. All you have to do is put in maybe study picks, right? And there it is. It's just waiting for you right there. Your spreadsheet does a couple things for you. The first page of your spreadsheet is where you can take everything that you do. Every time you pull the trigger on simulator, this is my trade, this is what type of trade it was, this is how I felt, this is how it looked, these were my advantages, and ultimately this is what happened. And then you can put some notes in there too. Maybe you were nervous, or maybe you broke rules, or maybe you followed every rule and it was amazing. You're going to go back and you're going to study these trades every morning, guys. Take some work to get to where you want to be. Every morning I'm going to look at my trades from yesterday, and it's only 5 or 10 slides typically, right? What worked? Because I want to repeat those patterns. I want to keep moving in that direction of success. So I want to know what worked every day. What didn't work? Did you break a rule and lose some money? Did you break a rule and it became hard to manage? So understanding what's working and what doesn't work, guys, it's going to allow you to recognize patterns in the market. But more importantly, it's going to allow you to recognize patterns in yourself. Everybody seems to have a thing. Some people don't wait for momentum. Some people love to trade in determination conditions. It's okay. Break everything in the beginning. Find your thing. What felt easy and kept you relaxed? Typically, following the rules takes the stress out of trading because your rules have been proven to win more than they lose. That's what you're going to determine from the study that you do. And then what felt forced? What made you nervous, guys? Breaking rules makes us nervous. It does, because we begin to trade on hope rather than advantages. And this brief historical study each morning is going to prepare you for the day, guys. It will accelerate the learning. And then the second page is your personal trade setups. Guys, this page is where every time your rules are met, every time the advantages are realized, take a picture, put it into this spreadsheet. And I'll open mine up. And it's really pretty simple. It's just an Excel spreadsheet. Here's my tracking sheet, guys. And it's got drop-down menus for everything that I do. And then my favorite looks. I've got over 220 pictures. Actually, we're probably even bigger than that. Getting close to 240 pictures of a rules-based entry. I'm going to give you my spreadsheet in the classroom right now. Guys, feel free to steal it over the weekend. Start clicking on these rules-based entries. Start burning this look into your mind. There's also sections to work on your management. Every trade that you take has a management opportunity, guys. If you present your trades in class, I'm more than happy to talk to you about what I see from a management standpoint. You're going to recognize patterns. You're going to recognize all these things that repeat themselves over and over, every market, every time frame. You can begin to identify those, create study tools. And then there's a whole section based on termination conditions, because the termination conditions stop the trend, and termination conditions are that anchor, that best of the best trade. So use that spreadsheet, right? Embrace the path. And what we're going to do in classroom is we're going to learn the trigger lines and the rules for when it's okay to trade. I'm going to give them to you visually. I'm going to give them to you written out. We're going to talk about them all day in the live market. Your MO is to simulate these trades, guys. To get in, to take these trades, to practice these trades, to present these trades. And let me tell you, you're going to lose trades, right? Especially in the beginning, because you're probably going to break rules. But even if you follow everything perfectly, guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So simulate. Be okay to make mistakes. And guys, don't hide your losers from the classroom. That's where the magic comes in. I want to read something that somebody sent me yesterday, and I thought it was pretty real for what we do. So a new CEO was talking to a retiring CEO. You guys have probably heard this, but I liked it. And the new guy says, "Hey, how did you get good at this job?" And the old guy tells him, "By making good decisions." How did you become a successful trader? I became a successful trader by making good decisions. And then the new guy asks, well, how do you make good decisions? And the old guy says, experience, right? It takes time to learn to make good decisions. And the new guy says, well, how did you get all that experience? And the old guy looks at him and laughs, and he says, by making bad decisions. Guys, you will make bad decisions, but there's a lesson in every decision that you make. Make sure you post it in the room. Let's talk about each and every decision that you make and get you on the path to making better ones. When you simulate, practice the correct rules. Don't set yourself up for long-term failure by practicing the wrong rules. Don't let that muscle memory develop. You're going to simplify. We're going to talk about a high probability trend trade for the course of an hour. And then we'll start talking about that medium probability trade, the first one that you'll probably work into your plan, but we're going to focus on the foundation first. After class the next day, as you guys go into the weekend, man, use that market replay. Go back and replay the day. Fix your mistakes, right? Take the trades that you skip the trades that you shouldn't have taken. Guys, take pictures. If you do market replay this weekend and you take 50 pictures, bring me 50 pictures to class. I'm okay with that. Your pictures help me. Your pictures help you. Your pictures help everyone else in this classroom. And repeat this process every day until you're always taking the correct trades, guys. Because if you're always taking the correct trades, chances are you're winning somewhere in the neighborhood of 70% of your trades, which means that you're guaranteeing yourself that you can win, which means it's time to go to one of those prop firms to start looking to test your plan in a real world setting and see how it works. So this is your path. I'm going to share this. I fought this path tooth and nail and wasted about 6 months of my life, and then I came back and then I followed this path, and it was amazing how easy it became. We're going to talk about a high probability trend trade, guys. That trade that teaches you to be a chart reader. 90% of what you do during the day is going to be reading your charts. 10% is going to be realizing that these advantages are present and executing trades, guys. A trade is nothing more than momentum, a clear path, and an entry area. Embrace this idea. These are the 3 advantages that get you into a high probability trend trade. When one of these advantages go away, guys, it's no longer high probability. You're no longer looking at that scenario where 70 to 80% wins are possible, right? So we're going to use 2 charts to recognize these advantages. The first chart is your large chart. This is a broad stroke of a brush, and this is showing the overall opinion of the market. And I say opinion of the market because the large chart's going to reflect what the deep pockets investors are thinking, what the guys that move the market are thinking. It's going to establish direction, it's going to establish momentum, and it's going to establish your areas, guys. And all of this information comes from just one chart. Our first 2 rules, the first 2 advantages of a high probability trend trade happen on this 13-2 chart, this large chart. It's going to establish the momentum in the market, and when that momentum is present, we're going to be able to identify a clear path. We're going to look for those termination conditions. Once these first 2 rules are met, then I'll go to a smaller chart. I'm going to refine that broad stroke of a brush. I'm going to take that big picture and I'm going to whittle it down to a small picture. We're going to pinpoint that area where the market is likely to continue. And your rule number 3 is your entry rule, providing the advantage of entering the market where the market is most likely to continue. This refinement process, I want to show you a picture of it. Guys, I speak through pictures quite a bit. 1 bar on your large chart might be 15 to 30 bars on your smaller chart. So we're going to gauge our advantages from that overall scenario, and then we're going to refine it. And you're going to be able to pinpoint with unbelievable accuracy where the market is likely to continue. This is going to allow you to reduce risk. This is going to allow you to maximize your profit potential. So 3 rules, 2 charts. Is everybody okay with that? It seems too easy, doesn't it? It can be. Let it be. Can't stress that enough. Let it be easy. So we're going to go to the rules, guys. Large chart says that we have to have strong trigger lines. So we're going to start there. And large trigger lines are defined through the T3 trigger lines, or strong trigger lines, excuse me. The trigger lines defined, guys. The first thing that they're doing is they're going to define your trend. And it's really pretty simple. I use that word a lot because I believe it can be, and I want you to embrace that. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. Guys, I don't care what kind of trades you're taking. If the background is green, trade with the trend. The trend is your friend. It's going to increase your chances for success. If the background is red, you're in a downtrend. Only looking for rules to be met for high probability trend trade short. Guys, the trend is going to change throughout the day. Your brain's going to have to change with it as well. No need to form an opinion. Green and red is very easy to follow. If you're colorblind, and it happens, I get colorblind people in here, and you need a different kind of visual cue. I don't know what shades those are if you are colorblind. But what you can do is you can look at the position of your small triggers, which are these solid lines, versus your large triggers, which are the dashed lines. When the small triggers break above the large triggers, the background paints green. Guys, if the smalls are above the large, you should only be looking for rules to be met for high probability trend trades long. If they're below the large, you should only be looking for rules to be met for high probability trend trades long, guys. The trend is easy to define. It's easy to recognize. Sometimes it's difficult to stick to that plan though, right? Rule number 1 says strong trigger lines, guys. When the small triggers are crossed up and above the large triggers, when this space is created between the two, and I like to always put emphasis on that. It's like a pair of scissors, and scissors have to be open in order to cut, right? To do the work, to get it done, they have to be open. This space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear it in class all the time. Odds favorable momentum. Did you have odds favorable momentum? You're going to see it on the checklist that I provide you. Guys, when you have that odds favorable momentum, this is the most favorable look for buying a pullback at Fibonacci support. This is that refinement tool. That small chart pullback, when everything says up on a large chart, is going to look like a tail or a wick after the fact. We don't trade tails, guys, but you're going to see it. This is a potential entry for a high probability trend trade long. In a downtrend, small triggers below the large triggers are wide. They're angled in the direction of the trend. Once again, it's the space created between the two that gives me that odds favorable momentum, that first advantage when looking for a trade. And this is my best case scenario for selling a pullback to Fibonacci on that smaller, faster chart. So guys, rule number 1 is simply going to give you the advantage of momentum. You're going to use the large chart, and it's not going to be present start to finish, guys. Sometimes those small triggers work their way inside of the large triggers. We call this a weakening of the large triggers. Anything can happen up or down. Just verbally listen to the difference between the two. This look gives you odds favorable momentum, a market that's likely to continue in the direction of the trend. This look, anything can happen triggers, is really just a crapshoot, right? A flip of the coin. It could go up, it could go down, and you're going to see reversals in the market quite frequently when you have that anything can happen trigger. It takes away the advantage of momentum. So you're going to be patient. With anything can happen, you're going to sit on your hands. You'll wait for that odds favorable for the rules to be met, and look how the market continues. It loses momentum, reverses again, provides odds favorable momentum, the market continues to push down. Sometimes those triggers don't agree. Sometimes they don't agree with one another. Sometimes they don't agree with the direction of the overall trend. This is your cue to sit on your hands, guys. Rule number 1 is going to give you the advantage of momentum when the trigger lines don't agree with one another, when they don't agree with the color in the background. You've lost that advantage. This is where new users, this is where even veteran traders are going to form an opinion. Well, the background is green, but the triggers are down. I think it's going to go up. I hope it's going to go up, or I hope it's going to go down. Sit on your hands. Wait for the advantage. That odds favorable momentum is coming back. It just might take a couple minutes, guys. But this is rule number 1. And that was what? 2 minutes to talk about your first advantage. That advantage of momentum. Is everybody comfortable with this? Especially you guys that are coming back for day 2. Pretty simple look, right? Wide triggers, everything says up, space between the two. Guys, the momentum is there. Smalls below the large, larger wide, space between the two. The momentum is present. It's time to look for a clear path. Rule number 2 says no termination conditions should be present, guys. No area is likely to stop the market. You have to have room to your profit targets. So let's go through, let's go right back to the instructions, to the user guide, and let's define a termination condition. And it's a Fibonacci-based indicator that may reverse the market. How easy is that? What are the areas, guys? It could be a divergence high, which is this magenta line that prints from a pivot that's losing momentum. That's what divergence means. Divergence means a loss of momentum. It could be a divergence low line, this cyan line that prints from a pivot that's losing momentum. It can be red Fibonacci resistance, blue Fibonacci support, or yellow 1-to-1s. Guys, these are the areas that may reverse the market, that may take away your advantage of a clear path. There's a recipe for defining whether or not an area is likely to do that. And two things have to happen. I'm going to type this in the room. Guys, write it down on a piece of paper. The first thing that happens is price reaches an area. When price reaches an area, it means that those dynamic Renko bars, if it's a downtrend, if the background is red, these red bars come down and reach Fibonacci support. All you have to do is ask yourself, where are my triggers, guys? Where are my small triggers? Where are my large triggers? If they remain above the area of support, when price reaches this area, we've reached a termination conditions. The market may reverse, the market may stop, the market may bounce. Price reacts to Fibonacci, guys. It takes away your advantage of a clear path. Price reaches the area, absolutely no trigger lines go through. No more short trades. Sit on your hands once again. Wait for the market to give you that clear path. The path is considered clear when both the small and the large trigger lines break through an area. If the market comes to support and the trigger lines remain above, no short trades. You're waiting for that area to break. But when both the small and the large get south of support, support begins to act as resistance. So now I have a clear path. You can see that I also have odds favorable momentum. And there's one of those tails, guys. There's one of those potential pullbacks to an entry right at resistance to carry us down to that next Fibonacci support. This is what we're learning right now. The advantage of momentum, the advantage of a clear path, and ultimately we're going to find that entry to get us into the market. I've got some great pictures that you can put into your spreadsheet. This one is a polar bear in a blizzard. Let's see if we can get it to open up. There we go. So termination conditions at a high. Here's your study picture, guys. It covers 3 different scenarios. When price loses momentum and creates this divergence line, it's not a termination condition. This is nothing more than a pivot with a loss of momentum, guys. It is when price reaches that divergence high, the trigger lines remain below. This is a termination condition. This is an area likely to stop the market. And then, guys, if this area creates a full reversal, now I have what's called a strong top. Now I have what's called a good top. This is the precursor for your highest probability trend trade, a termination that causes a full reversal. Price reaches resistance. All of the trigger lines remain below resistance. No more long trades. If this resistance creates a full reversal, we refer to it as a good top or a strong top. Price reaches 1-to-1s. All of your trigger lines remain below. No more long trades, guys. These are termination conditions from a high. I'm going to flip the chart over here and we're going to show you termination conditions from a low. Because you have the advantage with futures trading to make money both directions. So we need to see these things at the highs and the lows. Price reaches 1-to-1s. Absolutely no trigger lines break through the area. This is an area that may reverse the market. If it does, it's now a strong bottom. It's a good bottom. Price reaches Fibonacci support. All of your trigger lines remain above, even with odds favorable momentum. This is a termination condition. No more short trades, guys. No reason to trade into that wall. If it creates a full reversal, it's now what we call a strong bottom, and there's that odds favorable and some of those tails. Here's a pivot, loss of momentum, not a termination condition. When price reaches that divergence low, now it's a termination condition because the trigger lines remained above. So guys, in the beginning, allow it to be simple. Give yourself two options. Price reaches an area, absolutely no trigger lines break through. This is a termination condition. You're not looking for a high probability trend trade anymore because you no longer have the advantage of a clear path. Both the small and the large get to the other side of resistance. You have odds favorable momentum. You now have a clear path, and there's one of those tails once again, guys. This is a recurring pattern. We're going to teach you how to recognize and to execute when these rules are met. And then there's a little question off to the side. What if you insisted on a clear path? What if every time you took a trade there was absolutely nothing in the way? Would it make your trading more profitable? The answer is yes. There's absolutely no doubt in my mind. There's another scenario, guys, and I'm going to talk to you about it now. This is your medium probability trade. This is the first one that you're going to work your way into. And I'm not trying to confuse you by adding an element, guys, but you're going to see this all the time, and a lot of you guys are going to try to take it. There's going to be a scenario where your small triggers break through the area, right? First, they hit it, and it's a termination condition, but those small triggers go raging through it with odds favorable momentum. Guys, this is an area with the potential to break. Strong trigger lines break things. It has the potential to break, but it has not broken. So this is not a clear path, guys. Your first medium probability trade that most of you are going to take is this look right here. We call it a 50-50 look, and not because of your chances of success, because 50% of your trigger lines have made it through the area, 50% have not. It is not a clear path. It is not a high probability scenario. If you have this scenario, what you've done is you have willingly forfeited the advantage of a clear path should you decide to take a trade. If you do that, don't forfeit the advantage of momentum, guys. Make sure that you have that odds favorable momentum. Make sure that it's reciprocated on a smaller chart. And make sure that you have the best of the best entry area. And we're going to talk about that in just a second. Before I go to entry areas, I want to talk about one more termination condition, guys. There's going to be times where the market turns. All of your trigger lines have broken through. You have a clear path. Maybe you even have a clear path with odds favorable momentum and you found yourself looking for a trade. And the market seems to turn from nowhere. This next termination condition happens on a smaller chart. Well, it happens on every chart. But you're going to recognize it first on that refinement chart, on that smaller, faster chart. And it's three divergences in the same price range may terminate the trend. Three losses of momentum that you can see because a negative number prints, because a cyan line prints from a low, or a magenta line prints from a high. If this happens three times, guys, it might terminate the trend. You lose the advantage of a clear path. It becomes even more powerful when your small triggers break inside of the large triggers. When you go from odds favorable momentum to anything can happen triggers, and you couple that with three losses of momentum, guys, it may terminate the trend. And when that third divergence is higher than the previous from a low or lower than the previous from a high, it's a head and shoulders pattern. It means that price couldn't even match the previous pivot, and you're losing momentum. Guys, you're going to see this look from a low and this look from a high in scenarios where that market appears to be turning from nowhere. This is going to allow you to avoid trading into a price range where the market may reverse. It's also going to allow you to manage out of trades, guys, to manage medium probability trades, to recognize visually on a smaller chart, on a faster chart, that conditions may be changing. Guys, this little recognition of three divergences is going to help you preserve equity. It's going to help you manage out of medium probability trades. It's going to help you identify this change and keep you from taking trades that probably won't work because the advantage is gone. It takes a little time, it takes a little study, guys, but termination conditions are really pretty simple in their most basic form. Price reaches an area. Where are the trigger lines? Did they break through? And guys, it looks like the NASDAQ is on a full run up, right? I know what you guys are posting in the room. Price reaches support. Absolutely no trigger lines break through. Guys, this is an area that may stop the market, and look how the market bounces off of it. This is the S&P. Triggers break through, support holds. No triggers through support, the market goes up. You're going to see this all the time, almost to the tick in a lot of instances. You always hear the adage, buy low, sell high. Guys, you now know where low is. You now know where high has the potential to be, thanks to Fibonacci. You can recognize momentum, right? You can recognize a clear path. And guys, now we're going to talk about recognizing where the market is likely to continue, that absolute best of the best spot so that you can enter a trade. Is everybody with me so far? Guys, I ask a lot. I really need the feedback just to make sure people aren't sleeping. The advantage of momentum through strong triggers, the advantage of a clear path through no termination conditions. Most of you will master these concepts inside the first couple days. Now we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Our large chart has provided us the overall opinion of the market. It has established our direction, our momentum, and our areas. And guys, now we're going to rely on these yahoos that want to fight the overall trend, these yahoos that want to fight against that overall opinion, and they're going to get us back to our best of the best spot. Thanks to them, we're going to have an entry at an area inside of favorable large triggers. Guys, our rules say, and I'm going to type this out, we're going to use a limit order, which means that you're going to wait for the market to come to you. And you're going to buy or sell a retracement. What's a retracement, guys? It's a small move counter to the underlying trend, which means that if the market is trending up, if everything says up, we want it to come down to our entry point. And if the market is going down with odds favorable momentum and there's absolutely nothing in the way, you're going to buy it on the way up on that small retracement using a limit order, waiting for it to come to you. And you're going to buy or sell at an area. And those areas can be mid-bands, one-to-ones, or fibs. So I'm going to use a limit order to buy or sell at an area. And that area is going to be inside of favorable large triggers. And that's the final part of the equation here, is those areas are going to be inside of favorable large triggers. And what are favorable large triggers? Favorable large triggers mean on your smaller, faster chart that your 5-1 large triggers, these synthetic or these smoother large triggers, and your synthetic triggers on the 5-1. These are added in. These are the 13 large triggers, your large chart triggers. When these are one on top of the other, when these are trending in the same direction, when they are wide in the direction of the trend, guys, this is your best of the best look because it's going to create the smallest point where the market is likely to continue. Embrace the idea of favorable large triggers. If they're not one on top of the other, guys, that advantage begins to go away. Those areas begin to grow and your risk begins to grow exponentially. So we're going to insist on areas inside of favorable large triggers. But it starts with this look right here. The 13-2 says up with odds favorable momentum. There's absolutely nothing in the way, and you're going to turn your attention to your smaller, faster chart. It should have strong triggers the same way you have them on the 13-2. The small should be outside of the large. The large should be wide, angled in the direction of the trend. Your large and synthetic should be working together, not apart. And you're only going to focus your attention on the areas that may fall within them. Guys, large triggers are moving averages, which means that they are constantly moving up in an uptrend. If you have an area a tick or two above them, chances are they're going to fall within. So it's almost like leading a passer with a football, right? Leading the clay pigeon when you're shooting skeet. So I'm going to identify fibs, mid-bands, one-to-ones. They're going to be inside of these large triggers that are coming up strong, but I'm going to buy a pullback. I'm going to buy a small retracement in price, and that small retracement in price starts with a reversal bar. At the time of this reversal bar, I'm going to identify my window of opportunity, that area where the market is likely to continue, guys. It's from my highest point of support to my lowest point of support inside of favorable large triggers. I'm going to right click and I'm going to activate a limit order at the top of that window because of the momentum, because of the clear path. And I'm going to wait. I'm going to wait for that market to come back to me. And if it does, I'm in a long position, guys. I'm in a long position with the advantage of momentum. I'm in a long position with the advantage of a clear path, and I'm in a long position with the advantage of an entry area. My recipe has been met. I'm in the trade, and I got in that trade when the market was coming down. My initial stop goes below the window of opportunity where that market shouldn't go. And guys, this is a trade that I'm taking every time it presents itself. I'm obligated because this is my trade plan. And 70 to 80% of the time, this is your result typically, guys. Profit target reached. Once the market moves in the direction of the trend, I'm going to reduce my risk below that reversal bar. Because I waited for the pullback, my profit potential is increased. Guys, this is your entry. You're going to study it. You're not going to trade tails. But remember when we said that when the rules are met on the 13.2, you're going to see that tail if we scroll back historically? Guys, that tail typically forms right at an area inside of favorable large triggers. If you wait for the tail, you're going to miss the trade. Momentum is easy to identify. It's easy to define. Termination conditions are going to ultimately be easy for you to define. You're going to have to go back and study and get good at these entries, guys. And it starts by circling these tails, right? And of course, crude oil is going to help us out here, live, right in the moment. If I go back and I scroll and I circle this tail when I have odds favorable momentum, when I have no termination conditions, that market pulls back to an area of resistance right inside of favorable large triggers. Does everybody see this? Guys, that's your highest probability trend trade entry. This is your focus for your first 20 days. Because once you nail this entry, guys, life gets easy for you. Great entries create manageable trades. When that reversal bar printed, I had 3 to 4 ticks of risk. I had strong triggers. I had a clear path. Do you guys want to do a bar by bar entry? New users, can we do that together? Let's get that look on the 13.2, what it would have looked like in the moment, right? Here's my 5-1 in the moment. So we go through the process. You know what we should do? You guys should have some sort of checklist, right? How about if I give you one of those? This checklist is going to give you all the rules for a high probability trend trade. This checklist is going to talk about where the market's coming from. Is it a good top or bottom? A termination that creates a full reversal. If it's a yes, you're looking for one of those 70 to 80% trades. If it's a no, it's okay. Because if you still have those 3 advantages, it's still a great looking trade. Do you have the odds favorable momentum, the no terminations in the area inside? Guys, do we have the odds favorable momentum? Smalls below the large are wide, they're angled in the direction of the trend. Does everybody see? You've got that best of the best look. You've got the advantage of momentum. Do we have a termination condition? What's the recipe, guys? The recipe is that price reaches an area. Price hasn't reached the area yet, has it? So do we have a termination condition present, or do we have a target looming in the distance? The difference between a termination condition and a target, guys, is the termination condition has been hit. And let's see if I can find that one. I have a picture. A termination condition has been hit. None of the triggers have broken through, right? A target is that area that hasn't been reached yet. It's that area where the market is likely to go based on momentum, based on direction. So what do you guys think? Termination condition or target? It's a target, right? This is the look on my 5-1. Everything says down, and I'm starting to get sweaty palms because I think it's going without me. Good morning, Debbie. I'm starting to get nervous because everyone's getting paid but me, right? I'm having these feelings of being left out. And everything's going, right? And I'm looking and I'm going, oh, there's my synthetics and there's my large, and the market goes down. Whoops. and the market's trending down, and it's down, and those synthetics are starting to work their way over the large. And I need that market to pull back, guys. Otherwise, I'm not going to get paid, right? And it's still going, and I'm nervous. And it's still going, and I'm feeling hopeless. And it's still going, and I'm wondering, how the hell am I going to make any money? Whoops, that was the wrong button. And then out of nowhere, those yahoos show up, and they give me a reversal bar. Is everybody with me so far? The large chart says go. The small chart looked like it wasn't going to give an opportunity, but there's that reversal bar. There is the beginning of that retracement. Let's create a window of opportunity together, guys, from the lowest point of the triggers to the highest point of the triggers. Is everybody with me so far? From the lowest point of the triggers to the highest point of the triggers is where I'm looking. But remember that I need an area. I need a line to bounce off of. What's my area inside of these favorable large triggers? There's only one. There's only one potential option, right? So let's create a window of opportunity from the lowest point of resistance to the highest point of resistance. Guys, how is that? That's amazing, isn't it? That's the point where the market is likely to continue. Your job as a brand new user is to activate a limit order a couple ticks below and sit on your hands. And here comes price, and that mid band's working down, and they're on a collision course. And you're now in a trade at 44.8175, guys. You have the advantage of momentum. You have the advantage of a clear path, and you have the advantage of an entry area, that point where the market is most likely to continue. Once you're in that trade and you get a reversal bar, your risk, guys, this is the amazing thing. Your risk is 2 ticks above that reversal bar. You're risking from 75 to 75, 4 ticks, $50. You're risking $50, guys. The small chart's done its job. Where's the market likely to go? Based on momentum. Where's the market likely to go based on Fibonacci? Remember, you're a chart reader. How about 44.7563, that big blue line in the distance? And the market comes down, right? But then it starts to go back up. But I still have odds favorable momentum. I still have no termination conditions. And my stop has already been established. Most of you will have already taken profits on at least half of your position. And this market comes up, and I'm nervous, but the 13.2 says go. And then it goes right back down and gives me another reversal bar. I can actually reduce my risk just above that reversal bar. Now I've got no risk, and my 13.2 still says the market's likely to go down. The 13.2 still says I have momentum and a clear path. And this market continues. Let's click that F, and it continues right to Fibonacci support. Guys, this is your highest probability trend trade. Give me a Y in the room if you're with me. We let the 13.2 lead the way. We refine that broad stroke of a brush on the 5.1. And guys, if nothing changes, we don't change, right? And then let me give you that one bar. There's that tail right there. And how many bars did we get out of this one bar on the 13.2? Let's take a look. That's a lot of movement, isn't it? That's a lot of movement on a smaller, faster chart. All within one bar on the 13.2. This is why we let the 13.2 lead the way, and we let the 5.1 pinpoint that area where the market is likely to continue. Guys, this is your highest probability trend trade. This is your best of the best. Your job as a brand new user is to scroll back on your 13.2, and every time you see the rules met, circle a tail. We're developing trust, guys. We're developing recognition through repetition. I circle a tail, and I see where that circle lines up on my 5-1. If it ends up in an area of resistance inside of favorable large triggers, I want you guys to open up your Capture TechSmith, or TechSmith Capture. I want you to click that big red button and left click at the upper right hand corner, and I want you to drag it all the way down to the bottom right. I want you to include your timestamps, and I want you to include your price. When you release, that TechSmith Capture is going to say, hey, do you want to take a picture? To which you will reply, absolutely, TechSmith Capture. And it's going to give you your image preview, guys. I want you to do this. I want you to take that call out button. I want you to write the rules on here. I had odds favorable momentum, right? Call it strong triggers. Define it. Remind yourself what's getting you to look for that trade. Write out no termination conditions. You can abbreviate. What does that mean? That means that I have a clear path, guys. Reinforce this lesson. Use the words. Get your brain associating advantages with the visual. And then come to your smaller chart and say, I sold a pullback at an area. Identify it. It's a midband. Inside of favorable large triggers. You're writing the rules because you're reinforcing. You're a rules-based trader. Your rules provide advantages. Take this picture. The first thing I want you to do is upload it. When you upload this picture, it's going to send it to the cloud and screencast. You have this picture forever to use for study. Remember that the first part of the path to success is taking this picture and posting it in the room, guys. The second and third hours are spent looking at your charts. Every time you post a picture, we're going to go back. I'm going to give feedback. I'm going to open up your picture and I'm going to say, hey, Conrad, that is the best look for momentum. You have strong triggers. It provides the advantage of momentum, great recognition. And you notice that it hadn't reached the area yet. And you didn't let that small space scare you because you know that you're buying a pullback, selling a pullback at an area inside of favorable large triggers. Your entry was perfect. Your execution was wonderful. And that market went from, we'll just say 81 to 76, which is 5 points, which is about 200, what is that? $250 per contract. If you held both to the end, you just made $500 on that trade. And if you do that every day, Conrad, $500 a day is a $2,500 week, and that's not a bad week, but it turns into a $10,000 month, right? Which puts you at a $120,000 year. I don't know about you guys, but the average person in America doesn't make $120,000 a year for 7 minutes of their time. Conrad, you're up $5,000 in 4 days. That's not a bad 4 days, is it? Great job. But guys, it's not the $120,000 that we're chasing, is it? It's the advantage of momentum, the advantage of no termination conditions, and being able to recognize where the market is likely to continue. All you have to do is study it, right? The next thing I'm going to do is I'm going to take this screencast link and I'm going to copy it. And I'm going to go to my spreadsheet, guys. And if I took this trade, I'm going to put it in the first page. If I didn't take this trade, if I'm just studying historically, I'm going to go to my favorite look section. And I'm going to show you guys how to insert a hyperlink. Right here, I can paste that link in. And it says screencast app. And I have no idea what this is. It's just a link. So I'm going to click on the insert button. And I'm going to click on the link tab. And when I do this, it's going to let me create a hyperlink, which is a fancy way of saying, here's what's going on in the picture, right? I'm going to post the address in the address bar like I'm going to Google or I'm going to eBay. And I'm going to put in there, perfect crude short, rules met. And when I click enter, I'm going to be able to go back and study that, guys. This is my best of the best. This is what it should take to get me into the market, right? These are the conditions because they have the advantages. Guys, this is your simple path. You can either embrace it or you can't, right? You can chase or you can wait. That's up to you. But I can tell you with no uncertainty that I've never had anybody in the history of using this checklist follow the checklist to the letter. Open up checklist. I've never had anybody follow this checklist to the letter over the course of 5 days, 500 days, and not do better than 70% winners. If you're brand new and you're visual, here's that exact same checklist with pictures stolen from the resource materials so that you can visually see it. And here's your homework for the weekend, guys. At the top of both of these checklists, there's a link to a video. This is your tops and bottoms video. This is your terminations videos. This is your is it going to break? Is it broken? Should I wait video? Watch this video this weekend. Whether you're brand new or whether you're old, watch this video. It's going to give you an advantage. And then ultimately, you're going to write a plan for yourself. Because you're brand new and because I like you, I'm going to give you my plan for simplicity, guys. This is a simple plan for consistency, to keep you focused on the best of the best. Never fight the 13-2 direction. Never fight the 13-2 triggers, guys. Don't trade against the trend. Don't trade against momentum. It's going to keep it simple and it's going to help you be consistent. Use the phrase, my trade is the high probability trend trade. Guys, in order to take this trade, these conditions must be met. There's your checklist again. Policing yourself, being consistent. If you give yourself 2 choices every day you trade the market, either your rules are met or your rules are not met, and only one of them gets you in a trade, guys, you're going to be taking a trade that typically wins 70-80% of the time. You're going to be giving yourself the highest chance of success. Guys, confidence comes from the memory of success. Trust is going to come from that memory of success. Your focus for 20 days is entries, great entries. Identifying that best of the best. Did the news spike, Bobby? Did we get a reaction out of it? Everybody had their note written, right? Everybody had their Siri alarm, news at 10. It did in gold. That's why we don't trade news, or why I don't trade news. Guys, if you focus on entries for your first 20 days, it's going to make your life easy. It's going to take the stress out of it because you don't have to form an opinion. You can simply have 3 rules providing 3 advantages, taking the trade, and that's it, getting in at the best of the best. For your first couple weeks in class, guys, all I want to see out of you, honestly, truth be told, is I want to see those pictures with great entries, right? I want to see you getting in at the area inside of favorable large triggers because great entries create manageable trades. I firmly believe that. Great entries create manageable trades. I liken learning to day trade to eating an elephant, guys. And eating an elephant is something that you can't do by saying, I'm going to eat an elephant. You have to do it one bite at a time, guys. Entries are your first bite. Management is your second bite. I'm going to give you the most mechanical approach, guys. It's here on that simple plan. And I'm going to go through it and I'm going to talk to you about it. Philly, I'm not sure that I'm going to have time today. How about if you post every question that you have in class? And let's see if we can get you answers during the class time. I have someplace that I have to be. You're welcome to email me. I'll help you as well via email. But I'm not going to be in front of my computer after class. I say ask everything you want to ask right here in class, right? Turn it into lessons for everybody. Guys, a mechanical approach to entry is going to take the stress of trading away from you. A mechanical approach to management is going to take the stress of having to read your charts. It becomes an if-then scenario. If you take the perfect entry at an area inside of favorable large triggers, doesn't this look exactly like the one that we just did? Your initial stop goes outside of the window of opportunity, guys. And when you take this entry, one of 2 things are going to happen. You're either going to get stopped out because this is your cost of doing business. This is your 20 to 30%, right? And that's going to happen. And losses are a part of a positive equity curve, guys. I've never met anybody that wins 100% of their trades ever in the history of working with traders. But by taking that best of the best entry, by having all of these advantages, guys, if it gives you a reversal bar, your stop moves from outside of that window of opportunity to 2 ticks above that reversal bar, below that reversal bar if it's a long. Your targets are in place and they're super simple. Target 1 is $100. Quick profits, right? Get in, get out, put it in the bank, feel good about it. But right now with this new stop with the reversal bar, the only thing that's going to happen is I'm either going to get stopped out of the trade for a small loss or my first target is hit. If my first target is hit, the dopamine rush is real, guys, and it shows up. I've got $100 in the bank. They can't take that from me. That's mine now. That's in my account. Locked in a box. And now I'm break even. I've moved my stop to break even. Absolutely nothing bad can happen to me. I'm on this high from the quick winner. I have zero risk in the trade. And now only one of two things are going to happen, guys. You're either going to get stopped out break even or you're going to hit that second target. And that second target is $200, guys. In one trade, you're looking for $300 of profit. That's it, $300. If that second target is hit, no matter what the market says, guys, you're out of that trade, $300 in the bank. If your goal is $250 per contract, you only need to do this twice. If it's the slowest day known to man and you only get one of these trades in, $300 day is still a $6,000 month, guys. That's not bad at all, right? Focusing on the absolute best of the best. There's your management right there. Guys, your entire plan as a brand new user takes up less than a third of a page of paper. Simplicity. When you begin to add that medium probability trade, and guys, all of you are going to do it, that 50-50 trade, where an area has the potential to break but it hasn't broken, you're going to have to take this medium probability trade and you're going to have to be sure that you're not forfeiting any other advantages, right? So I'm going to show you an example of a medium probability trade. I have a short entry and a long entry. I'm going to click on the link straight from the plan that I gave you. When the smalls break through and the large don't, and I have odds favorable momentum, rule number 2 is not met, guys. I'm forfeiting the advantage of a clear path. My money's worth a perfect entry on the 5-1. On this smaller, faster chart, I want absolutely no divergence, no slowdown, no loss of momentum. I want strong triggers. These triggers better be strong and outside of the large the same way they are on the 13-2. I need that momentum present. And I want the smallest window of opportunity. Guys, I don't want to put 20 ticks of risk on a trade that is only medium probability. So there's a short entry, right? And if I go back to my plan, I also put in a long entry. Same thing. I need to know exactly what it looks like. Guys, you're taking these pictures every day to create recognition so it becomes second nature, so that it's easy to recognize. Because it's medium probability, I've got a different set of rules for entry. I still have to have odds favorable momentum, but now I'm insisting that it's the same on the 5-1. I'm insisting that there's no divergence on the 5-1, guys. And I want it to be from a good top or bottom on the 13-2. I want that large chart. I want it coming from a termination condition that creates a full reversal because it gives me the best chance of success. If all of these are yes, I'm going to enter at the area. If divergence prints, I'm not going to take the trade because my rules aren't met. Because it's medium probability, it has to be managed differently. It has to be managed assertively. If divergence prints, well, now my rules aren't met. I'm going to exit the trade. My first contract isn't going to be $100. It's going to be at the trouble spot. It might be $75. But I'm identifying through my chart reading where that market is going to potentially have trouble, and typically that's the area that's not broken yet. Second contract, 200. I'm not getting greedy on a medium probability trade. Guys, this entire plan, it's labeled the KISS plan. Keep it simple, sunshine, right? If this were your focus, the top half for 30 days, it's going to set you up to be able to execute the bottom half. Guys, this is all you need for a trading plan. If you never chased another trade in your life, you would be winning 70, 80% of your trades, right? Even at 60% when winners are bigger than losers. Guys, even at 40% when winners are bigger than losers, you can still have a successful trading plan. You can still be making money in the market. Embrace the simplicity, guys. Embrace the path. Steal these checklists that I've given you. Steal these spreadsheets that I've given you. Take them, study them, embrace them, post in the room. Fill up your spreadsheet, right? Learn the rules. Make it easy. Simplify. Guys, this is your path. Are there any questions about the path? Are there any questions about taking a picture, about recognition? Did this one win? What do we think? If we were in at 81, we only had to get to 79 for $100, right? So we got $100 at 79. We only had to get to 77 for the 300. Guys, you were out of this trade before the pullback, before that second pullback even happened. You had $300 in the bank from here to here, and you know what the cool thing is? Is that pullback happened to an area inside of favorable large triggers with the rules met. A lot of you might have re-entered and made another 300 all the way down to Fibonacci support. One trade, daily goal met, right? Guys, this is your S&P. Weak triggers, even with the clear path, that's not your best look, is it? 3 divergences in the same location. We've seen this one before, and look how the market pushes up. 3 divergences in the same location. 1, 2, 3. The third divergence is higher. The triggers aren't strong. Isn't it cool that you guys can recognize where the market is likely to stop? Isn't it amazing that you can use momentum to recognize where the market is likely to go? Holy smokes, my camera just turned on. And isn't it unbelievable that you have a simple set of rules so that you can understand where the market is likely to continue so that you can take advantage of it? Guys, welcome to Nexgen. This is what I talk about every day, first hour, every time. Working on simplicity, putting yourself in a position for success. That's the end of the first hour. You guys are awful quiet today. That's cool. I don't ever force anybody to talk in this room, guys, but if you really want to be where you want to be, if you told your salesperson, hey, you know what? This is my path. This is my goal. My goal is to be a day trader. My goal is financial independence. My goal is to quit my job. My goal is to be consistent. Then guys, you need to start posting in this room. You need to start asking your questions. Nobody ever got great at golf watching videos of Tiger Woods. Nobody ever won a Grand Slam because they watch videos of Serena Williams. Find your voice. Ask for help, guys. That's what I'm here for. And I'm pretty warm and fuzzy. I'll tell you when you did something wrong because you need that feedback. But I'm going to tell you in a nice way. We're going to celebrate your victories. We're going to correct mistakes and put you on the path to success. That's what we do at Nexgen. I'll be back in 5 minutes, guys. Post your pictures. Ask your questions. When I come back, we're going to start scrolling through the pictures that you guys were showing me. Back in a few. All right, let's get rolling into that second hour, guys. How we doing so far? You guys feeling okay? We learning stuff? This is the part, guys. The second half, or I guess second 2/3 of class, is where I'm going to scroll back and I'm going to start looking at all the pictures that you guys have posted. I'm going to give you a little bit of feedback. We're going to talk about what you did, the advantages that were present. We're going to talk about the advantages that were not present. And guys, here's a true story. It's not my job to tell you when to get into a trade. It's not my job to tell you when to get out of a trade. My job is to teach you to read the indicators, and that's kind of the approach that I'm taking. So, if you post a trade that's not a high probability trend trade, that's why it's so important for you to tell me why you did what you did so that I can be helpful. The better you annotate your charts, guys, the easier it is for me. The reality is there's going to be a point where you guys have been in this classroom long enough, that I understand what you're doing. And it becomes less important for your annotations, especially if you're this guy, where every trade that he takes looks exactly the same. Every trade is rooted in odds favorable momentum. Every trade is rooted in a clear path. And Ron has developed an approach for himself through his chart reading to be able to get in and out of the market, to be able to take small chunks. He's taken his foundation from a high probability trend trade, taken the rules and the advantages and turned it into a trade that appeals to his sensibilities. Ron, I guess you weren't up at 4:20 in the morning because that would have been a good one too, right? So guys, you're not bound to the high probability trend trade, but you need to be able to read your charts. You need to be able to read your indicators. You need to be able to recognize advantages so that you can execute trades, right? Jose, let's see what you got. Here's the look over here, and that's strong triggers. And strong triggers coupled with a clear path. And look at that entry, guys. Absolutely beautiful. Every chart agrees for the trade. He gets in at 89. He takes quick profits. And then that market just had other options, right? It decided not to finish the move. Two divergences, weaker triggers. It looks like it might have slipped Jose for a tick there. But even on a trade that doesn't work, his ability to read charts gives him the opportunity to make a little bit of money quick, right? And get out of there with virtually no loss on the second contract. Jose, this is great trading. This is a beautiful, high probability trend trade. Ninja crashed. Man, I know that's a pain. Guys, my brother has been working tirelessly to get this fib accumulator. He's hoping to have it done in the extremely near future. That should take a lot of the stress off of NinjaTrader. I wanted to remind you guys, NinjaTrader is not Nexgen. NinjaTrader is not Nexgen. The coding for NinjaTrader 7 and 8 are exactly the same. If you have a NinjaTrader license, you can do your analysis on 7 over on 8. That's what I do. I don't get a lot of crashes. It happens every now and then, but it is frustrating. Guys, I'm going to click copy on this perfect high probability trend trade. And I'm going to go to my spreadsheet. And we're going to put Jose in the Hall of Fame for like the 1,000,000th time. Because his ability to read charts is second to none. And that's Jose's perfect high probability trend trade long. I'm going to come back and study that entry. I'm going to make sure that I can do exactly what Jose did because Jose did it well. Jose, great trade. I'm sorry about your frustrations. Hopefully, John and his programmers are on the brink. You guys don't know this because you don't talk to John every day like I do. He is in this nonstop process of trying to always make life better for you guys. Always. All right, David, let's see what you did. All right, so David, you say you had a high probability trade, right? You said that you had odds favorable momentum. David, I appreciate that you're writing your rules on the chart. Did you have odds favorable momentum, David? And guys, this is one of This is one of the great things about posting in the room. David says, I think I did. So David, what I'm going to do is anytime you post a chart, anytime anybody posts a chart and they say, hey, Mark, I had odds favorable momentum, well, then I can go back to my database and I can say for a long trade, the small should be above the large, they should be wide, they should be angled in the direction of the trend, and there should be space between the small and the large, and it's that space that lets me know that the odds are favorable for the market to continue in the direction of the trend. And David, in a downtrend, the small should be outside of the large, right? There should be space between the small and the large. There should be that little separation between the two in order to give me the advantage of momentum. So what happens, David, is we go through this lesson, and this is everybody, guys. This is how the classroom works. We take your chart, we take your trade. No, it wasn't a 50-50 because a 50-50 is a reference of the trigger line location. David, this is a trade without momentum. You have anything can happen triggers, which isn't necessarily a deal breaker all the time. You got it, Cam. But do you see how we lost momentum? The smalls returned in. We get into that anything can happen. And with that anything can happen, if you look at your 5-1, we also have anything can happen, and we have a loss of momentum. So when we talk about the equation, the momentum is gone. You still have a clear path, right? I love it. You waited for those fibs to break. But you have a clear path with an exhausted market. We know it's exhausted. Look at the momentum. It's going away. And man, David, your entry is great, right? You're looking right at that area, right inside of favorable large triggers. David, I think you nailed an entry on what is a medium probability trade. Why is it medium probability? And I'm going to annotate the chart like I would annotate it if I had taken this trade. I would say, I'll say anything can happen. My triggers are anything can happen, right? So I know that it doesn't have that momentum. It's not likely to continue in the direction of the trend, but I do have a clear path. I've broken through support. It's likely to act as resistance. I'm in a downtrend, right? So I'm identifying all these advantages. Everything says down. And David, you did have an area, that fib right inside of favorable large triggers. So it's 2 out of 3. It's medium probability. So if this is the area where the market is likely to continue, and I know that I've lost momentum, so it's not high probability, David, it's okay to tell yourself, if it goes past this fib, I'm out of it, right? If it moves beyond this fib, to hell with this trade. I don't have the advantage of an area anymore, and I've lost the advantage of momentum. This is a great looking trade, David. It really is. I might have reduced my risk 5 or 6 ticks and said if it doesn't go from the area inside, it's just not my trade. And that's one of the advantages of having those 3 rules. I think it was a great trade. I think that it was a medium probability trade. It had a shot at continuing to that next area. Yeah. Absolutely. And guys, this is what we do every day. Keep posting your charts. You're going to hear the same thing 100 times, and it might be the 98th time that it just clicks. And you're like, oh my gosh, that just made sense. What happened? That's how it worked for me. That's how it tends to work for everybody. Chadwick, let's see what you did. Chadwick loves that Ron style trade, right? Everything says up, everything is good. He hops in, hops out, makes money, beautiful. Everything. See how you're losing momentum here, Chadwick? 1,000th for you. So Chadwick, you're taking a momentum style trade without momentum. That's a little tough sometimes, isn't it? It worked because you kept it behind the fib. and then you get in, and I like this look. Everything stays outside of those triggers. I think it's a good trade. I think everything was in the right spot. You had that clear path. Just not as much momentum, right? And you prefer this mid-band separation look for your longs? Tony, it's asking you to update names with numbers behind the name. I haven't been asked that yet. I would just ignore it for the time being unless it kicks you out. I'll talk to John and Jason about it and see what they say. I haven't seen that prompt yet. Yours did this morning. Maybe I just missed it. I seem to be working okay. Chadwick, I like everything you're doing here, man. You're waiting for a clear path. You're letting everything be up. Everything's strong. All charts agree. And you're taking these little pieces. You entered a few ticks above the termination, pulled your stop down to where it was comfortable, right? Below the area likely to stop the market. Beautiful stop placement. Money, money. Everything says up. The path is clear. Money, money. And you knew where it was likely to go. Chadwick, was it comfortable? When all the charts agreed, was it comfortable to take that trade? Did you feel calm? Did you feel like you had a better chance of success when you weren't fighting anything? I always do. I always feel great when all my charts agree, guys. I hope you do too. That's a great lesson. Great trading, Chadwick. And Chadwick, you haven't been with us that long. I like that you're already establishing a plan. You know what you want to see to get into the market. Guys, I want Ron C on everybody's Christmas card list that takes that trade, though. Everything says down, clear path. And Ron made money right before the pullback to get you guys in. Ron, I want to see this short added into yours. Take that high probability trend trade short, Ron. You get to chili dogs and beach walks a little bit quicker. No, great trading. Guys, consistency is key. Every trade that you take should look the same, right? Every trade that you take should fit your plan. Then I teach on crude oil and the ES because it tends to flow smooth. I can't say which is best. What's the best date for you to take out on Friday night? Is it a brunette or a redhead? I don't know. That's up to you, right? Which is the best ice cream? I don't know. That's up to you. I can tell you that crude oil and the S&P moves real smooth. The lessons are there. The patterns repeat themselves. So much so that Alan came in and was able to make money. Oil flows great. S&P flows great. NASDAQ is like a psychotic weasel on meth. It's very difficult to trade. Gold can be very temperamental. And if you're not super comfortable with your plan, those can create challenges. So Alan, I like it. Except for one thing. What do you think I'm going to tell you, Alan? Guys, you know how we recognize patterns in people? Whoops. Hold on. I took the wrong picture. Let's just do this. So the 13.2 has odds favorable momentum, right, Alan? 13.2 has no termination conditions. And first of all, I want to applaud you on the entry. Guys, look at that rock star entry. Virtually no risk on the trade. First profits taken. Beautiful. A second divergence prints, right? And your brain starts saying, oh my gosh, divergence, divergence, divergence. How many divergences does it take to potentially... No, I said that it moves smooth and typically predictable. Guys, everything's tough to trade if you don't have rules, if you don't have a plan. These trades, guys, these patterns, they repeat themselves on every market, every time frame. The difference between the S&P and NASDAQ is the NASDAQ is like if you're hitting the fast forward button. It's fast. You have to be able to know your rules and react accordingly. The S&P is a little more forgiving, right? And that's okay. Does that make sense, Jay? I don't think anything's tough to trade because I don't have to form opinions. There's absolutely nothing difficult about my trading plan because I know exactly what I'm looking for every time I pull the trigger, and either my rules are met or not. The only thing that might affect that is the speed at which the market moves. Exactly, Conrad. So, Alan, not a good top, right? It's not a termination that creates the full reversal. I'm with you 100%, and I get that, understand it, and I appreciate it. So this not good top might make me weary on a 50-50 right here, but by the time my trigger lines, everything comes through, man, this is in the rear view mirror. I had a conversation with a guy yesterday about that. This bad top screws up this 50-50 trade. That's what it is. At this point, we're in a different realm. You've broken everything. Everything is odds favorable. Everything is down. You're in this high probability scenario, and your second stop is right there at a potential entry. Because if I have odds favorable, if I have no termination conditions, and I have an area inside of favorable large triggers, man, I have a trend trade 100%. What's the flip side of that? Nice money. You made money, right? You made money while you're working on management. You made money from a high probability trend trade. You made money as you're working on your plan, guys. And that's what this foundation does. This foundation gives you an opportunity to still get paid while you work out the kinks. Great trade, Alan. Management's the second bite. If you keep taking these beautiful entries, management becomes easy. And eventually you're going to trust that when you're break even +1, it's behind the areas where the market is likely to continue, you're going to be a little bit braver through that second divergence. And it's going to get you sometimes, but when your 13.2 looks like this, more often than not, it's probably not going to get you. Great trade, Alan. Guys, the idea is to keep doing this every day until it's so stinking comfortable you can't stand yourself. Conrad says he's done on the day. 3 trades, $880. Whew, man. Gold chart, favorable momentum? Yes. Termination condition? No. Large triggers are open and down. Small triggers are down. You went short a 2-lot when every chart agreed. And you made a $180 profit on a 2-lot. Every chart agrees. Get in, get out. You don't go broke taking profit. Amen. Amen. Guys, every chart agrees. It's the same look. Every chart's red. Every trigger's down. What an awe-inspiring look, I believe. Great trading, Conrad. Conrad's only been back with us for a couple weeks. Killing it. Trading with. The software does work as long as you work it. Mike M says, man, if Ron can do it, I can do it. Get in quick on momentum, get out quick. Oh no, this is it. This is your 21. This is your 13.2. Sorry, I missed that, Mike. Look at this. Do I need this chart over here? Let's do it on 2, guys. Let's keep it simple. And then, Mike, this is kind of the same thing I was telling Alan. This weak bottom, this reversal not coming from a termination condition, wreaks havoc on a 50-50 trade here. When you have a clear path, everything's good, you've gotten through that 50-50 spot, this weak bottom is just overrun or something like that. You've got rules met, and you've got them met beautifully. And you take a no divergence. Look at this entry. You could have waited for the mid-band. You get in a little bit early. Could have waited a tick or two above the mid-band. That fear of missing out. I love this. Enter the pullback inside the large triggers. Had original entry at the mid-band, but you got scared. Good job being human, Mike. Guys, this is that trust piece. But here's the flip side of that. So, Mike, you got in a little early, right? Your risk is still what your risk is. It worked out. You just had to sit through a couple extra ticks. No big deal. But you didn't miss the trade, right? That's okay, guys. When we talk about entries, there's a reason that I say get in a tick or two above the midband. You're in 3 or 4 ticks above the midband, but you knew where your risk was going. And when that reversal bar prints after, it's still minimal risk, and you still had tons of room to get up to that potential termination condition on the 13-2. Beautiful. Great trading. Rules-based trading, isn't it? So I'm going to steal it because you can't stop me, and I'm kind of a hoodlum. And I'm going to put that hyperlink, and I'm going to call it Mike M's Perfect Long, because it is. Mike, I want to be able to do what you do. I want to be able to do that 2 or 3 times a day so that I can make money every day consistently. Can we talk about one of the cool things that you could have done? So you exited at 71.3, right? But you had a ginormous magenta line and your triggers were getting weak. That is such a good target, right? If you're out at 72 saying, man, what a great spot for that market to bounce, that's 7 ticks, right? That's $70. What if you do that on 5 trades a week? That's an extra $350 a week, right? That's an extra $1,400 every month from recognizing where the market's likely to go. We all get greedy, right? Because what if it breaks? A lot of what ifs. We use these for termination conditions, everybody, because the market typically reacts to them. Whether it's a bounce, right? Whether it's a full reversal, price reacts to these key areas, and we've identified the areas that they react to the most. So much so that we teach termination conditions by them. Guys, these are the areas where the market is likely to go. If it's not a termination condition yet, it's okay to let it be a target. Great trading, Mike. And I'm not knocking this. This is a beautiful trade. You gave it a shot to go, right? Awesome trading. Keep doing it. Stay consistent. Same thing every day, right? Everything says up. The path is clear. The entry is perfect. Move stop to a tick above break even. Didn't like where the trade was going and stopped out. It's worth it, right? With that look, with odds favorable, momentum, and a clear path, absolutely. Guys, this is one of those trades too where that quick profits on the first contract gets you paid. The second one gets you break even. You still made your commissions, right? You gave it the best shot. It's a beautiful entry. And Mike, if your plan looks anything like my plan, you're obligated to take this entry, right? Because it wins more than it loses. 70% of the time, it's going to that profit target. This is one of that 20%. But your ability to read charts allowed you to manage out with a 0 loss, a couple ticks in the bank. Beautiful trading. Guys, anybody can do this. You just have to learn to trust it. Everything says down. There's a pullback to resistance. It's only 2 divergences, and Mike says, "Pya, with this look, come and get me." And I'm sure that's exactly what it sounded like in his room. "Pya, come get me. I triple dog dare you." Taking profits where the market is likely to go. Everything still says down, and you're like, yeah, let's go. And then finally, you're like, okay, you trailed stop behind a pivot. Beautiful trail. It gets you. What a great day. What a beautiful trade. What an awesome result. Guys, if you're brand new and you're watching this, everybody in this room started where you're at. Everybody in this room started as a student, started on day one, had to learn momentum, had to understand termination conditions. Everybody in this room posting these winners was frustrated, was nervous, was unsure, didn't want to post their pictures, didn't want to take pictures, didn't want to use a spreadsheet. Everybody in this room has done it. The majority of you in this room have blown out accounts in your quest for being a day trader. Now that we have things like Apex, guys, nobody ever has to lose 10 grand for a lesson. $35 a month controls $50,000. Cam's out of the room. We'll look at his trade anyway, right? Might be a lesson there. He's trading gold. He has odds favorable momentum. He has absolutely no termination conditions. He takes his entry at the area inside of favorable large triggers. He makes money here. He's protecting his investment. He makes money here. Beautiful. Guys, there's a lot of information on here. The rules are the same. The looks are the same, even if it looks nothing like it. Cam, I know you're not here, but that was nice trading. Oh, there you are. Great timing. Nice job, man. Beautiful. The only thing I might say, Cam, and this is kind of the same thing that we talked about with that crude oil short, is if you really have a clear path, right, and you really have odds favorable momentum, 2 divergences doesn't need to be a deal breaker, right? Because it pulled right back to resistance inside of favorable large triggers. Maybe that's an add-on opportunity. It's okay to manage out, especially because gold's a little temperamental. But that mid-band inside of favorable large triggers with odds favorable momentum and no termination conditions, actually that's an entry. That's a potential for short. Great trade, Cam. Nice job. Jose trades. Let's see what you got. Make these big. High probability trend trade, coming from a good bottom. Everything says up. All charts agree. The only challenge on this one, right? We still have momentum. We're starting to lose it just a little bit, but I like the look for sure. You're losing momentum a little bit here. The one thing that I start to notice, guys, and maybe scroll back, take some pictures, let me know, is when your areas begin to fall outside of those large triggers. When your areas are below for longs or above for shorts. When your small triggers are returning, guys. Which area outside of the large triggers is it going to bounce from? Is it going to bounce from the mid-band, from the fib, from this fib, from these 1-to-1s? Is it going to bounce from this right here? Does that make sense? Those entry areas are inside of favorable large triggers for a reason, guys. And when they start to fall outside, I begin to see challenges. If you're going to use another chart, this is a 50-50 look on your 21-3, right? And what do we know about 50-50 looks that don't come from a good bottom? They may reverse. So that's a low probability 50-50 trade, coupled with a losing momentum clear path trade, coupled with a loss of momentum and no areas inside. Do you see how if you're going to use the bigger chart, use it? There was some good information there. And then just another chart. Your 13 range had a giant reversal bar and then a down bar and another breakout bar into a 50-50 here too as well. Guys, I love multiple charts. I really do. I firmly believe, and I'll say this with zero hesitation. I will say this with zero hesitation, that you can do it on 2. You can do it on 2. It's a good trade, Jose. Those extra charts might have helped you out. David S., let's take a look. David S., you don't have momentum, right? There is zero momentum in this trade. That's okay. I love it. And this is why you have the tendency to place your stop so far. Market bounce back. So David, how about this? If the conditions aren't right for a trend trade, why not put your entry where your stop is? If you're like, oh, this crappy look might push me all the way back to support, why not enter at support instead of suffering all the drawdown? Because the rules aren't met, right? There is no momentum here. There's an area inside of favorable large triggers, but without momentum, it's not a rules-based trade. Why not? If you're saying the market might come all the way down here, why not enter down here? Why not take the same picture and find entries instead of losing $1,500 on the trade. Does that make sense? I'm not saying break your rules and enter down here, but I'm saying if the rules aren't met, why not pull this out of it, right? Say, I'll stop taking this trade, especially if my brain's telling me it's going to push back to support anyway because there's no momentum. And maybe over here, I'll wait for a pivot stop out at that key area. I'll wait for my triggers to roll at that key area. You didn't look at your triggers? I don't know if you guys knew this, but that's the first thing I talk about. Everything has to do with the triggers, guys. Everything has to do with that advantage of momentum. How many times do we see the market turn when there's not momentum? Let's do this. I'm going to take the trigger lines off of. Loss of momentum, the market turns. Not odds favorable momentum, the market turns. Weak triggers, huge bounce. Odds favorable, giddy up. Loss of momentum precedes the turn. There's a pushback to a mid-band. There's a pushback to a mid-band. Loss of momentum, it pushes back. Do you guys see a theme here? Loss of momentum, look at the pushback. Guys, there's a reason that rule number 1 is there. Because holy smokes, when you lose momentum, it may push deeper. That's right. I said holy smokes. The triggers should be the first thing that you look at. I don't know if that's into a termination condition or not, but that certainly is some odds favorable momentum on its way down. So David, pay attention to those triggers, man. They're going to save your bacon more often than not. Mike M. How does this happen? No losing trade. Where did the other half of the money go? Go through gross realized. Do you have is there a trade multiplier, Mike, that you're working with? No? Go to your executions. Go to the executions and see, make sure everything got filled maybe. Or this happens on Ninja if you temporarily lose internet connection. Thank you. I've never seen that before. Maybe reboot Ninja. Yeah, or commissions could be way out of whack if you put those in there. I've never seen that. I wish I had an answer for you, but I don't. No, but you don't want that to carry over into your live money, right? I'll see if I can find an answer too. One of my favorite things to do is bug my brother, so I just dropped that into his Skype. Yeah, I don't know, Conrad. I'm pushing it over to John Novak. We're going to see what he says. He's pretty smart every now and then. Cam, got a poor trade that was a loser. My initial reaction was surprise and then embarrassment to not share this chart, but I'm transcending that urge. You have to if you want to be successful. I appreciate that. This was an impulsive trade upon return to the computer. Didn't look at the 13.2 until after you were in the trade. Man, Cam, I'm going to call you after class and we're going to talk about this human thing you have going on, right? Being a little impulsive, jumping in, thinking you're seeing something right in the moment. God, I can't tell you how many times I've lost trades doing that. Rules broke. You traded right into a termination condition, right? You took a beautiful entry. It created a manageable trade. You could have taken quick profits. It made it to that $100 spot. And you held and hoped because mentally you just weren't there in it, right? Guys, this is going to happen sometimes. You're going to break your rules. And it stinks to break your rules, but you're going to break your rules. I broke my rules yesterday. I took 3 losers in a row. I had a psychotic episode. I had trend. I even had momentum. I was trying to break a termination condition with my brain, just like this. And then because I was so convinced I was right, I took the trade twice. Guys, you're going to do it. Everybody's going to do it. It's okay. If you're rooted in a great foundation, though, and you have that solid foundation, you're going to say, okay, there's my termination condition, right? That's a beautiful entry, but I broke rule number 2. And you're going to talk yourself through it. And you're going to say to yourself, holy crap, I'm so good at reading these indicators. I just had a moment. Cam, thank you for sharing it. And then Conrad, you said it was right after a loss of connection. So you went to go make sure that you weren't somewhere in a trade where you shouldn't have been. Doing that quick homework. That's smart. Man, guys, we made it through all of your pictures. So things that I notice about this second hour, guys, and maybe you noticed it too. There are 50 people in the audience. There are at least 5 to 10 of you that are probably new. Oh, look, that was a 50-50 trade, wasn't it? Smalls below, larger not. What did it look like on the 5-1? It looked like divergence, divergence, divergence. Does anyone have rules keeping them out of this trade if divergence prints? You guys want to see something else on a 50-50? I had 1, 2, 3, 4 Fibonacci areas that hadn't broken yet, right? Not one area that didn't break yet. I had 4 Fibonacci areas that weren't broken. Not only did I have 4 Fibonacci areas that weren't broken, I had 3 losses of momentum on the 5-1. Man, when I talk about my plan, guys, when I talk about that keeping it simple plan, when I look at a 50-50, maybe I should underline this. One area not broken, guys. There's no reason to give up too many advantages. Should have gotten in here where you are 32, 3 bars above midband. There's that overrun. There's that momentum. I got you. I was like, that's a lot of bars. But you've got the strongest look, right? And because of that strongest look, you can take quick profits. There's a lot going on over here. Guys, it's not high probability, but it's momentum, and it's momentum, and it's room to a target. It's just chart reading going into a plan that suits Tony's needs. That's all it is. Had to stop trading. $50-50 with divergences, it failed. There's a 4th divergence. But now if we go into the laws of termination conditions, we've reached areas that don't have a clear path because all the trigger lines are below them. Guys, if I can't go short and I can't go long, what do you suppose my option is? What do you think the best option is? If your rules aren't met for a short and your rules aren't met for a long, guys, this is the hardest part of being a day trader. It's sitting on your butt and doing absolutely nothing. Go into the kitchen, right? We all put on 20 pounds when we start trading the markets. Except Bobby, he sits on his hands. Hard to eat a sandwich when you're sitting on your hands. Not impossible, but it's difficult. Look at this, guys. Weaker triggers, big pushback. Where did it push back to? David S., do you see it? Pushed all the way back to where your stop placement typically is. Just waiting for rules to be met, guys. NASDAQ, our little psychotic friend, is just running, right? I don't know. Do me a favor, Jay Solar. I want you to take your ES and I want you to open it up, okay? So I'm going to do it. I'm going to do it with you. But I think it's important that we do it together, right? Because if you're not sure, Don't you? You need to learn how to do it. And this is for everybody. So what am I looking for? I'm looking for odds favorable, and I'm looking for no termination conditions. That's a 50-50. That's a termination condition, Weak triggers, 50-50. No triggers through. Weak triggers. J Solar, there's odds favorable momentum, and it's no termination conditions. Guys, who got paid on this trade this morning? So there was at least one. See how I did that, though? And guys, you should do this every day at the end of the day. Did I miss anything? Because if you did, it becomes a great study opportunity. So, Jay, that's the only one that I'm sure of. I'm going to scroll back. There may have been more, but that's it for the best of the best so far. And there's some 50-50s in there. That's a 50-50. Yeah, so, Jay, we're looking at one. One trade. Conrad made 500 on it. I know some people made about 150 on it, right? Depending on how you manage the trade. Guys, that's a great tool. And Jay, I love that you asked that question. Thank you for that. Whoops. Where did it go? There it is. So on the S&P, we can say there was one high probability trend trade opportunity. But that one opportunity, if you were patient, paid a lot of bills. So let's do the same thing on crude, guys. Some days it's tough. There's a 50-50 that worked. I don't know what the entry look was. Scroll back, scroll back. Man, there is a tail with odds favorable momentum. Probably an opportunity to make a little money. It's Friday. So maybe one in crude. But if you caught the one in crude and you caught the one in the ES, you're probably over your goal. And guys, that's why patience comes in. So let's do it on the NASDAQ. NASDAQ is an absolute freak of nature. You have to be quick on the NASDAQ because they move in big bursts and you have to be comfortable and confident. And it doesn't look like the NASDAQ gave any really clear opportunities, right? So guys, what are we learning? We're learning that these trades don't present themselves every minute of every day. Jay, I think that that's a great study tool. When you're wondering if you missed something, and I do this a lot, guys. If I think that I missed something, I go back and I look to see if my rules were met. And if I missed it, I have to ask myself, why did I miss it? Did I miss it because I was scared? Did I miss it because I don't understand the rules? Did I miss it because, I don't know, the coffee kicked in and I had to go to the bathroom? That happens. We're all human, right? Don't judge me. Guys, scroll back and take a look. Some days what you'll find, you're like, gosh, I'm just waiting and waiting and waiting and I've got to be missing everything. And then you're like, oh, I'm really freaking good at this. Look at my patience. Replay them, paper trade them many times as you need. Absolutely. Conrad's riding this high of confidence right now. I love it. Conrad's like, let me tell you how I got to where I'm at. Man, Conrad, don't stop. Scream it from the mountaintops. Conrad followed the path, guys. And he's reaping the rewards. Tony, you had to stop trading NASDAQ too fast for you? Great recognition. Isn't it horrible to give it all back? 12 hours a day for 30 days. You got obsessed. Conrad's girlfriend's still mad at him for that 30 days. Guys, the NASDAQ, it's tradable. But it's crazy. You seem to be missing some fibs. So Jeremy, anytime someone's missing fibs, guys, everybody wants to be a NASDAQ trader until it's time to trade the NASDAQ, right? If it's untradeable, leave it alone. You reset your data. You know what I'm going to ask, right? I'm trying to figure this out. This is your S&P. See if I can adjust a little bit so I can look. You're missing your 21.3. 79 is a 21.3 fib, but you do have it up top. How many days back are you, Jeremy? When you right-click on it and you go to the database or data series, are you 10 days back? Okay. Let me go through the rest of my stuff. When you go to NinjaTrader 8 and you look at the data, do you have it do not merge? Sometimes corrupt data comes in, guys. Sometimes corrupt data, and it may be mine. I never suggest that you guys are the problem because sometimes it may be mine. I do a lot of stuff for this class. I change things, I move things, but I try to stay consistent for you. I don't have 8 up, but let me open up my NinjaTrader 8 real quick. And I can't describe it, so let me open mine real fast. But check this out, Jeremy. And this is really for everybody. If I go to the user guide, a couple things that you can do. Whoops. Oh, that's simulator. That's not what I want. Here we go. Ninja Data Repair and Reset. So under Tools, Database Manage, you can reset them here and go through kind of do it when your data is not functioning right. I'm not sure that there is a do not merge on 8, but you can reset all the historical. You can repair all the historical. Sometimes this works out and helps out. On 7, do not merge and then do it helps. And I think that you have to disconnect, Jeremy. I'm pretty sure that you have to disconnect from live. And then if you need to, guys, this is a great one for the weekend. Start fresh. It means that you have to spend a little bit of time rebuilding some stuff. But start fresh on the weekend. Come into Monday 100%. I'll do it. I'll start fresh this weekend as well. Gail, I believe we still have a couple people using TradeStation. I would ask that same question in Traders Chat, and I'll get you the link to it, because that's where the guys that have had Nexgen for 15 years are sitting, and I believe some of them still use it. And then, of course, you can always get in touch with Jason as well, or send John Novak an email. I believe we still have a couple users that are using TradeStation, though. How is that for kind of a maybe answer? You're welcome. Sorry. I wish you guys will realize that I'm not the tech guy. Anyone that's been in this room knows that that's true, but I will defer you to the people with the answers if I can't give them to you myself. So you're very welcome. Are you just trying to avoid NinjaTrader? I know there's some people that do, and that's okay. You guys know that John Novak's building his own browser, right? He spent like the last 9 months with programmers all over the world creating his own platform. Right on. It should be available pretty soon. Beta version's coming out pretty soon, guys. The idea is that you'll be able to open up your iPad, sit in the airport, and make money trading the software. I'm excited about it. I can't wait to do it. I told him this morning he needs to fly me in so that we can write a user manual together and maybe play golf. Really play golf, and if we happen to write a user manual, cool. I'm excited, though. Guys, my brother never sleeps. He slept once. He didn't care for it. He's like, I can't get anything done like this. I don't think he's slept since. Odds favorable or not odds favorable, guys? What do you think? David S. Odds favorable momentum? Cam says not. No, no, no. It's not odds favorable. What does divergence mean? It means a loss of momentum, doesn't it? Not odds favorable. Divergence. Oh, thank goodness you didn't go long because your rules weren't met. Otherwise, you just got stopped out. Unless you're a certain someone who will remain nameless. And then he said, well, without that momentum, I'll just put my stop down here because it's probably going to go here anyway. Whew, giving me heartburn. Not you. I love it. It's funny, guys. Everybody has patterns, right? We all do the same. I don't care if it's breakfast, right? Some of you pour your coffee with the left hand, put creamer in with the right hand. Every human being has patterns. Patterns make us feel comfortable. You're going to find your patterns. You're going to find your patterns through study. You're going to find patterns through repetition. You're going to find your patterns by doing the same darn thing every day over and over. My job, and one thing that I'm really good at, and it annoys the hell out of my wife, is I recognize patterns. I try to never speak in absolutes. I try not to use blanket statements. And I will recognize the patterns. All you have to do is present your charts. If you show me what you're doing, I can tell you how to do it better. Or I can tell you don't change a darn thing because you're doing it awesome. That's my job. Guys, I'm going to take a few minutes. I'm going to run a lap. I'm going to stretch my legs. I'm going to breathe deep through my mouth and exhale through my eyelids. And I'm going to get ready for this last hour. I want you guys to do me a favor. If you have a question, I want you to post it in the room. One of you told me that you had all sorts of questions for me, and you haven't posted one yet. You know who you are. Guys, I'll talk to you after class, but not if you refuse to participate in class, right? I'll take aside my time and help you after class, but not if you won't take advantage of the 15 hours I'm here to give you answers. That's not fair to me. So, I'm going to take a break. If you had a stack of questions that you need answers to, guys, this is your opportunity to put them in the room. We're going to have 45 minutes to make it happen when I come back. Mic silence for about 5, guys. All right, guys, I am back. So, Mike M, great question. There is no merging of the two. So what you're going to want to do, if you want to, are you using an Apex account or are you just hanging out just one or the other demo? Not yet. So if you are using just 7, all you need to do, let me pull this over, is you're going to have to go to help and license key, and you're going to have to put your license key in. And then once you put your license key into 7, it won't work on 8. It'll only let you run 1 at a time. If you move over to Apex, what you're going to be able to do is you're going to be able to run your NinjaTrader license on 7. And this is how I do my analysis because I have an Apex account. And I will do 100% of my analysis on 7. Let me see if I can find a picture just to show it. I'm sure I've got one somewhere. So I'll do my analysis on 7. This was just a picture that John Novak and I were talking about this morning. So I'll have my 7, 7, 7, and then I'll run 1 on 8 without any tick data at all. And I'll use it only for execution. So you'll notice that there's no synthetic fibs, right? There's nothing that I see on these other charts. If you're using Apex and NinjaTrader 7, NinjaTrader 8, that's the easiest way to get it done, is do your analysis on 7 and then do your execution on 8. But if you're just simulating, you're totally cool. Just 7. Rock with it because everything is the same, guys. Oh my gosh. My NASDAQ froze. I wonder if I did something. 15,332, 15,309. My NASDAQ froze. Did they shut down the NASDAQ? I'm going to close that workspace. So crude's bouncing through, but ATM strategies are the same, right? Setting up an ATM strategy is exactly the same, except you push this little red button. It'll have you put in your parameters. Entering the market. Right-clicking is still going to let you do those limit orders and stuff like that. So the execution's the same. Guys, if you're going from 7 to 8, from 8 to 7, it's pretty easy. Conrad, I need you to feed the gerbils on your internet, right? Need to keep losing on real money. That plan will stop working the second you go to real money. So guys, check it out. 50-50 on the S&P. All those divergences, it didn't work, right? It pushed right up to resistance. None of the trigger lines followed, and the market pulls all the way back. Hits support, absolutely none of the trigger lines break through, pushes all the way back up to resistance, and that divergence high. Guys, congratulations, you are witnessing real time a market that can't do much. Jose, it is a boring market today. You know, I had an old guy tell me once, he goes, Mart, some days you're the boot, and some days you're the butt, and you never know which it's going to be. Is it a long weekend? What's going on Monday? Did I miss a holiday somewhere? The markets closed on Juneteenth? Really? When did that happen? Trading hours. Dun, dun, dun. Monday. Doesn't open till 5. Doesn't open till 5. So guys, it looks like the market is closed on Monday. So if the market is closed on Monday, guys, Nexgen is typically closed. So Monday's going to be a day off. And it's going to rain here. I don't get to go play golf. Carnes Sarnet, he said. Monday's that day that follows Sunday, Debbie. You'll see it on most calendars. Thanks, Jose. I know, you just got me a day off. It's Juneteenth, Debbie. Celebrating the emancipation. Right? That's a big deal. Another study day, right? Guys, market replay works on holidays. Just replay the day that wasn't a holiday. That means that you have 3 days this weekend to go through and study. Guys, range bound. Pain in the butt. Ron, you should be on the beach by now. Jose, you should be hanging out at wherever that is in your picture, right? K-Pops, go back to Morocco. Take that shirt off. Go get a tan. Gary, deep dish pizza. I'm telling you guys, days like this will test you. There's nothing to do. And if there's nothing to do, your brain's going to try and convince you to do things. It has June gloom. How do you get June gloom on the beach, Mike? What beach is yours? Beach bar open, fair deal. Thinking about pizza for Sunday? I just ordered for my dad, Carlsbad. Right on. There's a company called Taste of Chicago. He grew up on the south side of Chicago. So I order him food from Chicago for Father's Day and his birthday. Pretty good stuff. Have it sent. Debbie, you had trees down from the storms. You're north of Dallas, right? You're in Texas? Texas storms are no joke. Carlsbad, California. Man, it's beautiful out there. We've had nothing but sunshine here in the Pacific Northwest, but we've got a little bit, we got a little storm front coming through. So no golfing Monday, Tuesday for me. May gray, June gloom. Jersey Shore for you then. Right on. California's supposed to always be sunshine. Power's out and it's hot. Oh, Debbie, you have to have a generator in Texas. Last night. That's one of the things we did in Houston is we made sure that we had a generator always. So in storage or the garage, I always had a generator and I had a window unit. So I would never get hot. We would just tape up one room and turn it into a chiller. Guys, this is how Friday afternoon goes sometimes. We talk about what we're doing with our lives and not so much the trading because the trading isn't there. If there's a concept you guys want to talk about, right? Hey, Mark, let's talk about entries again. Mark, let's talk about termination conditions. You guys probably don't realize this, but I can ramble with the best of them. What's your path? Let's talk about the path. Because some of you aren't embracing this as well as you could. Guys, if you're a Nexgen user and you're not profitable yet, there's a couple things that may be happening. Part of it is you may not be getting feedback. You may not be posting in the room. You may not realize some of the mistakes that you're potentially making. You may not realize that there's things out there that could make you better. To minimize your learning curve, guys, post your pictures in class every day. Are you ready, Alan? Oh, you're going to hate me for this. Don't hate me for this. If the rules are met, then you have a second entry. Isn't that almost too easy? So that's your easy answer, but what's the challenge? Are you ready? So let's go back to that trade again. The easy answer is when the rules are met. That counts, I think. You're one of those guys in the golf carts. You're a menace. All right, so watch this, Alan, and man, this takes, especially if you took the first one and managed out, right? Let's go after it. So this already happened, and I'm going to take this bar off. And it always begins with the rules, right? If the rules are met, well, you have tunnel vision. And guys, I tell this story a lot now, and I know that you've heard it. Back, I guess it was my late 20s, I road raced motorcycles. And that was my thing. That was my hobby. Big motorcycle enthusiast. And I would go out and I'd road race motorcycles. And I was a novice. I was brand new to the sport. And there were experts and there are novices. And there's these two classifications. And I had an expert tell me once, because there were novices going faster than experts. And I was like, man, why is that guy a novice? He's going faster than all the experts. And an expert told me, he goes, the difference typically isn't lap speeds. He goes, there's a lot of fast people in the world. He goes, the difference is that an expert is going to recover from a mistake instantly. It's going to take a fraction of a second, and they're going to continue that pace. A novice is going to have to recollect, right? To dust off. Guys, when I was a novice, if I had a close call, it ruined my pace for about 3 or 4 laps until I got my head back. When I became an expert, I could literally save the bike from a crash and never miss a beat, and my lap times would be off by a couple tenths. So what we have here is you have the perfect entry, right? This is your novice entry. This is the best of the best entry. This is the one that everything says down. You had time to think about it. Everything was in place, and you caught this one beautifully. That's your first piece of the puzzle. All of your attention, Alan, went into this entry, 100%. By the time you got this entry, your brain was like, whew, I'm beat. I sure hope it just goes to the fib. And the market comes down and you take your quick profits and this divergence prints and you think to yourself, oh my gosh, divergence is bad. I'm pretty sure divergence is bad. That's a loss of momentum. Whoa, what's happening on the 13.2? I don't know what's happening on the 13.2 because I'm still reeling from my entry here. And man, this is real, guys. The adrenaline is real. And this happens and you're like, I better exit. And while you're exiting, oh man, because I've been there. While you're exiting, Alan, I'm activating my add-on. I'm saying my 13.2 still has odds favorable momentum. My 13.2 still has no termination conditions. I have so many pictures and so many repetitions that this is burnt in my mind. And my brain doesn't say 2 divergences, get the hell out. My brain says this second divergence is going to push me up to my add-on, to my area inside of favorable large triggers, because the rules are met here. And guys, it takes time to get to that point. Alan, if you always nail this entry, right? Take your quick profits, even if you manage out. Your job, Alan, is to take that picture that you presented in class. I'm going to scroll up and see if I can find it real quick. Guys, every great entry has a management opportunity. Every perfect entry gives you the opportunity to work on your management. So this picture comes back into play, right? Alan, you're studying it. Where did it go? It's not opening the link. Let me see if it'll let me open the link. I'm having challenges here. So I wonder what's going on with my... Please, we are experiencing technical difficulties. Open link. Let me see if I can copy the link. No, that's not it. All right, for whatever reason, Discord's not letting me get these pictures. If you have it handy, Alan, will you post that trade that you took? Will you put it back in the room? Or you know what? I'll just create a picture. So initially, this was your trade, right? And you're going through, thank you. And you annotated it perfect. Man, it's still not letting me take pictures. Okay. Sorry. Great picture. So you take the picture. I'm just going to recreate it because I'm having technical difficulties with Discord right now. And you annotated it and you were like, man, I've got odds favorable momentum and I've got a clear path. And then I had a perfect entry, right? And you did all this. Not a prefect, a perfect entry. And you did all this, and you're like, man, this is the best of the best, right? And I've got this picture, and it's great, and what a great entry. And then you just left it alone. You presented it in class, and we had a conversation. So, Alan, the next step for you is to take that same picture and circle that next entry, maybe draw an arrow to it, and say, I'm going to put a little dissertation on the bottom. When I was exiting, the rules were met 100% for a high probability trend trade. Because of this, it becomes an opportunity to add on or hold that second contract because nothing has changed. All advantages, right? Because we trade off of advantages. Advantages were in place. So this becomes your second picture, right? You take the first picture, you come back, you re-annotate it. We have a conversation in class. Your entry was perfect. Everything was wonderful. And then I finish, and it uploads it to Screencast. And then once I get that from Screencast, I'm coming back to my spreadsheet. And then I'm just going to call this one something simple, right? So rules still met, no exit. Does it bother me that the small triggers are inside of the large triggers? It doesn't bother me a bit, Alex. Do you know why? And that's a great question. I'm going to show you exactly why it doesn't bother me. Because the large chart defines direction, momentum, and areas. And that rascal of a guy, Mark, every day in class tells me the only termination condition that I'm looking for on a small chart is 3 divergences in the same place. The only time I'm going to let the small chart affect my decision making on a high probability trend trade is if 3 divergences print. Even if the small triggers, because I'm not gauging momentum on a small chart. Right, Alex? I'm gauging momentum on a large chart. And my large chart said, get the hell out of the way. We're screaming to the downside. Does that make sense? It takes time to trust it. It really does, guys. It takes time to trust it. It's hard to not get wrapped up on this small chart and let it affect all of those advantages. I do for in a 50-50 scenario when I'm not willing to give away an advantage. And Alex, if your rules say that you have to have strong triggers on the 5-1, then that's not your entry, is it? It's just simply not. And that's okay. But what happens over time is you begin to wholeheartedly believe in those advantages. Guys, I think I froze. Can you guys still hear me? I'm going to log out and log back in. All right, can you guys hear me? Can you see my screen? Okay, cool. I had like this whole frozen moment there. Um, so Alex, if you have to have odds favorable, totally cool, right? That's your thing. One of the bases of trust that I've developed over time through repetition is that I firmly believe that odds favorable momentum on the 13-2, and when it has a clear path, will more often than not override this look right here. And then as I grow with the software, Alex, maybe it's if the areas are no longer inside of favorable large triggers, then that second divergence may affect me a little more. Maybe if I don't have the best trigger look, then maybe that second divergence changes. But initially, I try to keep it very simple and I try to keep it very focused and really embrace that 13-2 leading the way. And I'll use it for management as well. And you'll even see it in my management pictures. When am I going to hold for more? Man, when that 13-2 says go. Because the 13-2 is the overall temperature of the market. It's that large crowd mentality. And I love to hold when the 13-2 says that it's likely to continue in the direction of the trend. So absolutely. 50-50 trade, right, Joel? Coming from a termination that creates a full reversal, gives odds favorable momentum. Divergence prints. But you take it right at the area, and that divergence pushes it a little lower. Your stop keeps you in place. The momentum wins once again and takes you right up to your targets. Joel, beautiful trading. 50-50 again, not coming from a good top. You take the perfect entry, right? Split triggers, multiple divergences, 50-50, not a good top. And Joel, have you noticed that you're using a checklist for a high probability trend trade to take a medium probability trend trade? If you need a checklist for 50-50 trades, you can borrow mine. I'm always happy to share. Because on this one, you may not have been in that trade, right? You might have said, oh, crud, I'm giving away too many advantages. Maybe I will sit this one out. Repetition, guys. Recognition comes through repetition. Confidence comes through the memory of success. Why not give yourself the best chance of success? Whole bunch of shenanigans going on there, guys. That's a technical term, shenanigans. Some of you are going, look, it's a 50-50. Hell yeah. And then divergence prints, and you're like, but it's a 50-50, and I haven't been in a trade for an hour. And you get run over, and you're like, I hate this. This stinks. Mark's a jerk. He never told me that divergence on a 50-50 presents challenges. And then you'll be like, oh, wait a minute, he did. I just need to keep studying my rules, so I trust my rules 100%. There's crude oil. Did either of these give an opportunity? That's odds favorable and no terminations. Oh, and man, it really didn't give a great entry, did it? And you're like, son of a gun, this didn't give me one. So I'm going to take this one into the termination condition. And all that momentum pushed it back down, and then those divergences start printing. And guys, you want to know a true story? There's a point where this might be your trade, not as a new user, right? Because as a new user, we want nothing but advantages. There's a point where that might be your trade. But you got to write a plan. You got to keep it simple, guys. Simplicity yields results. It's been a good week. I hope you guys learned something this week. I say that all the time, and it's not just for me to go, heck yeah, I'm a great teacher. I'm not. Teacher's only as good as the students, guys. If you're getting something out of this class, then I'm doing something right. Then you're doing something right. Remember that it's a marathon, it's not a sprint. Good. Guys, my goal for you every week is that you stop letting it be complicated and you simplify. My goal for you every week is that you don't try to chase everything, that you try to chase the best, that you start taking profits at termination conditions, right? That you start entering at the areas instead of where your brain tells you to enter. My goal is that every day you chip off a little piece of that puzzle. You get just a little bit better. You keep it on sim until you're always taking the correct trades, right? You keep it on demo until you're consistently winning in that arena. And then when you're consistently in that arena, right? Thanks, Joel. You're doing great. Guys, when it starts to get easy, when it starts to get effortless, then you can go to Apex, right? You can control 50 grand for like, I don't know, what do they charge? I don't think they're having a sale right now. Maybe they do. You get a 50% off just for going from the Nexgen page. You can control $50,000 worth of capital for 80 bucks a month, guys. If you make 3 grand before you lose 2,500, if it's in place, if it's good, guys, you can trade other people's money. For 80 bucks, you can trade other people's money instead of blowing out 50,000 of yours. Conrad, you posted in there about your first run, right? It wasn't the best. Lost a lot of money live. Blew out accounts, guys. I think everybody's in that same. Took 90,000 cash out after losses. Then paper. Debbie, take care. Enjoy it. Guys, you don't have to lose all your money anymore like you used to. It's not a $10,000 lesson anymore. It's a $100 lesson. And reinforcing them every day. Every day. And that's it. And Apex won't let you do stupid stuff. Apex, if you do stupid stuff, they're not going to let you trade for them. Guys, everybody's plan changes the first time they go live. Everybody's ability to follow the rules goes out the window the first time they trade live. That adrenaline, you're going to have a pleat right up the middle of your office chair that it's going to take a professional steam cleaner to get out. Yeah, creativity, opinion, it's tough. But guys, Nexgen's here for you every day, every step of the way. All you have to do is participate. I've been asked the same question 1,000 times and I never get tired of it, guys. I've had people present pictures that look exactly the same with the same mistakes. I never get tired of it. Because every time you have the courage to do that, you get closer to where you want to be. True story. So markets are closed on Monday. And we should be closed on Monday. I'm double checking with Joe Novak right now, but if you show up and I'm not here, it means I'm sleeping in because the markets are closed, guys. How about Sunday afternoon? I don't know. You would have to double check. Isn't that funny? Does anybody else miss it on the weekends? Monday comes around, you start getting excited. All right. Bobby, I'm going to let my smartass show a little bit. You ready? So there's this amazing thing called the internet. And I can just type in CME holiday schedule and click on it. And it's like almost instantaneous. 16th through the 20th, Juneteenth, click on it. So you can go through. So the stuff that And I like having this. Let me give you guys a link to it. Whoops, let me click on the wrong link. Trying to get the right link. And Bobby, I forget about this information every time. I really do. Like, I will take this link and I will search it 1,000 times before I'm ever smart enough to just add it to bookmarks. So we had Memorial Day, right? Juneteenth. We're closed on Monday. Independence Day. It says the 3rd through the 5th. So let's go to the Independence Day, right? Tuesday, July 4th. Are we concerned about the Monday on the 3rd? Let's take a look. Trade date, it's going to close at 4 o'clock on that Monday, right? And it'll open back up on the 5th. So we know that the 4th of July, we got to go eat hot dogs and drink beer. Then Labor Day, Thanksgiving, Christmas, New Year's. These are the days that Nexgen is closed. Guys, typically Nexgen is closed from Christmas till after the beginning of the year. We take a week or two off at the end of the year to regroup, unstress our brains a little bit, but those are your holiday hours. You'll know that the market's not trading because it won't be moving. S&P, guys, it was range bound, right? Can't go down, can't go up, can't go down, can't go up. It tried to go down. Smack dab into one of John Novak's big silly blue lines and one-to-ones, and now it's bouncing up again after multiple divergences. But there's a lot of work to do to get a rules-based trade. Bad top, straight to a 50-50 with multiple divergences. You guys knew not to go short, right? 3 divergences in the same location doesn't mean go long. It means that we're in a holding pattern. Either the area clears or it breaks. Those are the only 2 options. It either clears or it breaks. Long weekend. Market replay this weekend, guys. Take a lot of pictures. If you need help beyond this classroom, if you've been participating, guys, send me an email. My email works. It's on the contact page. Heck, some of you even get a hold of me on Skype. I'm okay with that. At the risk of sounding ugly, I won't sacrifice all my free time because you don't want to participate in class, guys. I won't look at 100 pictures for you if you don't post pictures in class. But man, if you're here in class, you're posting, you're asking questions, and you need to send me a picture. Hey, Mark, what do you think about this? Drop it on Skype. I'll give you my 2 cents. We'll talk about it. My Skype works. My email works. Guys, people use it all the time. If you're writing a trading plan and you want some help with it, send me that picture. Send me that plan. Let's talk about it. If you're working on entries and it just doesn't click, send me 3 pictures of entries. Mark, am I getting this right? I'll talk to you about it. All of my Nexgen stuff is on my laptop. My laptop typically closes when I leave the room, and it doesn't open again until I feel a need to be on the computer. So on the weekends, it may be 2 or 3 days before I get to your questions. I'm not ignoring you. I'm just not in front of the computer. Termination, determination. That's it. Sit on your hands. Do nothing. Guys, these are great pictures when your rules aren't met. Gary, good job. You're making money on a day where there isn't a lot of opportunity. Great patience. We're just waiting, guys. I'm always available. Nexgen is always available. All you have to do is ask. Squeaky wheel gets the grease and all that good stuff. We're going to wrap it up, guys. Long holiday weekend.